Welcome back, my friends. The news today is that the rivalry between Tesla and BYD is heating up. Tesla and BYD are both major players in the electric vehicle market. According to a recent article by Investors Business Daily, Tesla and BYD are the world's largest electric vehicle makers, becoming more direct competitors in China and much of the world. In terms of sales, Tesla has sold more all-battery electric vehicles, BEVs, than BYD, but the gap is narrowing fast. BYD could seize the BEV crown before the end of 2023. BYD also has significantly higher gross margins than Tesla and has massively closed the gap in net income. At the midpoint, BYD's net income was $144 billion in Q3 versus $185 billion for Tesla. However, it's important to note that both companies have their own strengths and weaknesses. Tesla is known for its cutting-edge technology and innovation, while BYD is known for its safety, stability, and long lifespan of its batteries. But before we get into that, please hit the like button. Please leave us a comment below. We would love to hear from you. Please hit the subscribe button and the bell icon so that you are notified of upcoming videos. And before we continue, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions, doctors, including any type of specialty, nurses, and that includes all grades of nurses, lawyers, regardless of area of legal focus, teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. BYD is rapidly closing in on Tesla Inc. as the world's biggest seller of pure electric vehicles, with surging profits underscoring its sales clout despite intensifying competition at home. Shares of the Hong Kong-listed Chinese electric vehicle firm are up 1.7% this month, outperforming Tesla's 17% plunge and declines in other peers as well, while shares of Elon Musk's firm are still up by more than double the rise in BYD this year. Signs are pointing to further gains for the latter. Traders have snapped up bullish options on BYD, while analysts have raised their earnings projections for the Chinese company to a record high since its preliminary quarterly report this month. BYD posted all-time high sales despite intensifying competition and a broader slowdown in sales of China's new energy cars. BYD shares jump on China, EV makers' record quarterly profit. Musk cast a pall over the global EV sector with a grim outlook earlier this month, saying rising interest rates in the US have hurt its sales. Tesla's results are also suffering from the months-long price war that it had initiated in an attempt to fuel demand. Analysts have been lowering their earnings per share estimates for the US maker at the same time. The outlook for BYD has been rising. BYD still looks like the safest bet versus Tesla in the short term, given its discipline in terms of balancing volume growth with profitability, said Kevin Nett, head of Asian equities at Tocqueville Finance. It also has growing exposure to hybrids, which have been gaining market share in China and contribute to higher margins. Tesla's slowing growth is sending a warning to all EV makers. BYD sold a record total of 822,094 vehicles in the latest quarter, including hybrids, helping to cement its lead as China's best-selling car brand. What particularly surprised industry observers is that BYD seems to be making more money per vehicle despite price competition. Profit per car, excluding the impact of the company's electronics unit, rose as much as 46% versus the previous quarter, according to JP Morgan Chase & Co. estimates. The analysts believe BYD can maintain its profitability into next year, thanks to more sales of high-end vehicles as well as continued overseas expansion. Tesla EV investors face a reckoning as demand starts to crack. BYD is expected to start deliveries of its high-end Yangwang U8 and Fangcheng Baobao 5 in the fourth quarter, according to pundits at HSBC Holdings plc. Outside of China, BYD claims high shares in countries including Brazil, though tax and political considerations have kept it from entering the U.S. passenger car market. The improving profit outlook has helped make BYD's stock more attractive, driving its forward earnings multiple down to about 18 times, compared with over 50 times for Tesla. Recent options data also look positive as the volatility skew has shifted toward the more bullish side compared with a month ago. While BYD has been backed by Warren Buffett, Berkshire Hathaway Inc.'s selling of shares since last year may have weighed down its share price. Other headwinds for the shares include the European Union's anti-subsidies probe into EVs made in China. There is definitely a heavy China discount on the stock, but I don't see it getting worse, said Taylor Ogan, chief executive officer of hedge fund Snowbull Capital. which owns shares in both BYD and Tesla. Investors will have to wake up to BYD next year, when its two high-end brands begin deliveries, and it exports noticeably into new markets, he added. Tesla and BYD are both major players in the electric vehicle market. According to a recent article by Investors Business Daily, Tesla and BYD are the world's largest electric vehicle makers, becoming more direct competitors in China and much of the world. In terms of sales, Tesla has sold more all-battery electric vehicles, BEVs, than BYD. But the gap is narrowing fast. BYD could seize the BEV crown before the end of 2023. BYD also has significantly higher gross margins than Tesla and has massively closed the gap in net income. At the midpoint, BYD's net income was $144 billion in Q3 versus $185 billion for Tesla. However, it's important to note that both companies have their own strengths and weaknesses. Tesla is known for its cutting-edge technology and innovation, while BYD is known for its safety, stability, and long lifespan of its batteries. If you're looking for a company with a strong focus on innovation and technology, Tesla might be a better choice. If you're looking for a company with a strong focus on safety and reliability, BYD might be a better choice. BYD has become one of the most popular car brands in China, thanks to its ability to offer cutting-edge electric vehicles at affordable prices. The company has developed a range of EV products that are highly popular among consumers due to their ultra-low operating costs, competitive pricing, and advanced features. Another reason for BYD's success is its capability to offer a wide range of plug-in hybrids. BYD's performance was buoyed by rising gas prices in recent months, resulting in the growing popularity of plug-in hybrids in the country. Plug-in hybrids are generally more energy efficient than petrol cars and much cheaper than all electrics. BYD, a major player in the segment, was able to grab market share from traditional car makers. BYD is also the only Chinese automaker vertically integrated, manufacturing its own batteries and chips. Ultimately, BYD's popularity can be attributed to its focus on innovation, affordability, and sustainability. The company has been able to provide consumers with high-quality electric vehicles at a fraction of the cost of other brands. Chinese electric vehicles are becoming increasingly popular in Europe due to their affordability, advanced features, and low operating costs. Chinese automakers such as BYD and NIO have been making strides in the European market, offering a wide range of electric vehicles in different vehicle classes. According to a recent article by DW, Chinese e-vehicle manufacturers are shipping their products to Europe, with the aim of becoming the largest electric car producer in the medium term and ousting Tesla from the top. The article also states that Chinese EV makers are producing e-vehicles in different vehicle classes, while large European car manufacturers mostly only offer electric vehicles in the upper price segment. Another reason for the success of Chinese EVs in Europe is their ability to offer battery changing stations. If drivers don't want to charge by cable, they can have a low battery exchanged for a full one. The whole process should only take a few minutes. However, it's important to note that European manufacturers are also making strides in the EV market. They are focusing on innovation and sustainability, and are working hard to catch up with their Chinese counterparts. Tesla CEO Elon Musk has been promoting the company's long-delayed sci-fi-inspired Cybertruck on social media this week. However, the electric vehicle maker still hasn't issued final pricing and specs for the trapezoidal pickup, which it first unveiled in November 2019, and a company-wide email sent by Elon Musk implies he's worried about precision in manufacturing the truck because its straight edges mean variations show up like a sore thumb. In its second quarter financial filing with the U.S. Securities and Exchange Commission, Tesla said its factory in Austin, Texas was working on tooling for the Cybertruck, and production status was not yet active. The company also said in a shareholder deck that it was working on equipment installation for Cybertruck production, which remains on track for initial deliveries this year. The company has not said when it expects to be able to mass produce the vehicle. Tesla cut the price of some Model 3 and Model Y versions in the U.S. after the company reported third-quarter deliveries that missed market expectations. The starting price for the Model 3 is listed at $38,990 on Tesla's website, down from $40,240 as previously. The long-range Model 3 fell from $47,240 to $45,990, and the Model 3 Performance fell to $50,990 from $53,240. Tesla's Model Y Performance Sports Utility Vehicle now starts at $52,490, down from a previous price of $54,490. Beginning at the end of last year, Tesla began cutting the prices of its cars across the world in a bid to stoke demand amid concerns over slowing consumer spending in markets like the US and China, and as competition in the electric vehicle space ramped up. But the latest round of price cuts comes just days after Tesla reported third-quarter deliveries of 435,059 vehicles, missing analyst expectations and marking a decline from the previous quarter. Tesla has said that it has over 2 million orders for the Cybertruck, so demand does not seem to be an issue as it seems to be becoming for Tesla's older models. Again, Tesla is facing technical and manufacturing challenges when it comes to manufacturing a new vehicle. And even though Tesla's Model Y and Model 3 are very popular and have reached full-scale production, profitability of those older models is in decline because of the EV price war that began this year. Tesla desperately needs a high-profit vehicle that can bring bigger profits for a couple of years. But no vehicle can be profitable if it takes too long to build. And that is the conundrum facing Elon Musk and Tesla right now. What do you think? Please hit the like button. Please leave us a comment below. We would love to hear from you. Please hit the subscribe button and the bell icon so that you are notified of upcoming videos. Please share this video on social media. Thank you for watching.